Hey everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at Facebook, Amazon, Apple, Netflix, Google, Microsoft, and Intel. Okay, so Friday, or Thursday did turn out to be a head fake, and today was the big pullback. So the technology failing to hold on to the gains has been continuing. As you can see here, the close above EMA 4 did not hold. EMA 4 was the key level here at 156.86. The close back below that level today does signal more downside risk. The big level to hold it below now is going to be this 152 support level. If you see that level broke, then you're going to see that 148 retested. Okay, so that was the long lower wick. There was this bullish homing pigeon pattern that has failed to so far be confirmed. It's going to need to get back above EMA 4 to get the reversal going. Notice today's move was on very light volume, so you're looking at the lightest volume day since this drop was today. So it wasn't a big volume sell-off. It's more that just buyers did not step up today. That was the thesis today. That was the big theme, was that buyers just did not show up today. The European stock market was closed, but I don't know how much of a bearing how much of an effect that had. It's obvious that U.S. Investors are not stepping up to the plate at the current levels. In this video, I'm going to show you the weekly chart for each one of these stocks, so you can really see where the key support levels are. And last week, this bullish homing pigeon reversal pattern formed on the weekly chart for Facebook. Each candle represents 1 week of trading. But this week it started off with a gap down, and then today's candle is forming completely below that lower Bollinger Band at 159. So this is a very bearish move to the downside. The big level to bounce off would be the 100-week simple moving average at 147.78. It would be extremely bearish if that support level broke. It hasn't been it really hasn't tested that level since 2 weeks ago, when it came down and hit that zone. And the last time it hit that zone was way back here in August of 2015. So this is a very, very rare level for Facebook. Is it going to come down here and test that 147 level again, or is it going to try to get the bounce going? The big level to watch is EMA 4 at 163. It has to get back above 163. It has to get back above EMA 4 and turn into support to get that reversal going. If it fails, it's similar to this candle right here in January of 2017. After a pullback, it finally closed above, and that signaled the reversal. And so this is going to keep dropping as long as EMA 4 remains resistance. Now, it could work its way back between 155 and up to 163, and then hit a temporary top at that level. So keep that in mind. It's going to have to turn that level into support to get the real reversal going. If you look at the Facebook 15-minute chart, you can see it did find intraday support today. It came down and hit this 155 to 154.50 or so support zone. You can see it hit multiple times off of this 154.50 level, and so that really needs to hold. If that were to break, then you could see it drop down to 153. You can see that was the support from back here on the 28th, and then on an extreme drop, you're looking at 151. That was the big support from the 27th and the 28th, and then below that would be that 26 level, where it came down and started hitting that hitting the 140s. To the upside, if Facebook is hitting that middle Bollinger Band at 155.46 right now, it has to get above 155.50. That's dotted purple line. Once it closes above that level, it'll signal it's heating up, and then it'll have to get above this 100 simple moving average at 156. The move that you're looking for is similar to this move from Thursday, where it was above the middle Bollinger Band, and then it got above the 50 and 100 simple moving averages, and that's when it signaled that it was running, similar to back here as well. And so if these levels remain resistance, that's going to signal more downside risk. Okay, let's look at Amazon on the daily chart. I mean, this was a monster down day for Amazon. The bears made fat bank today, closed down 5%. It's getting close to that 30 oversold level. You can see Fasto's back below 20. It's having all the FANG stocks and technology stocks that have been beaten up are having a hard time getting above 4 or above 20 on Fasto, and that's a signal that the bears are still in control. Look at this solid red candle today. It started with the gap up open. It gave everybody a head fake, and then the bears were just in control pretty much the entire day, but except for there was a nice bounce at the end of day. And so today's candle forming completely below the lower Bollinger Band, I mean, it is signaling that this is oversold. I mean, it has fast O at 6.47. If the candles do work back into the bands, the big level to break is going to be EMA 4 at 1431. As long as that level is resistance, it's a signal the bears are still in control. To the downside, it has to close above to start heating up for the bounce play. To the downside, the 100-day simple moving average at 1326 needs to hold. It could drop another $50 or so, and then it would need to hold support. Look for a bounce off of 1320 support zone. That 1326 should hold. I mean, Amazon, you're going to have to really go back in time to find the last time Amazon was trading below the 100-day simple moving average on the daily chart. You can see in February when it broke down, it only tested the 50-day simple moving average. Well, it's currently below that level. That support level broke last week. So this is a much more bearish move. This is a much more painful drop. This is so much more severe than back here, and that's why people are wondering, was this 1620 zone, was this the top for the year? Is this going to be the top? And so generally you would have a retest of that high. Generally you wouldn't make a top and then just fall and then never come back up and test that. Now we'll see if that happens. I mean, there was a high here and then it came back up and tested it and broke out higher. So you would think that it would eventually, before the year ends, it would come back up and test those levels, but you never know. If the candles remain below the middle Bollinger Band up here at 1536, that's a signal that Amazon's still in a downtrend. It's in a bearish downtrend right now on the daily chart. The bears are clearly in control, and so it's going to need to reverse and hold that 100-day simple moving average and get above EMA 4 to finally get some upside going. Now here's some hope for the bulls. Look at the 4 red candles in a row. This is the weekly chart, and so now it's hitting the key level. It's right at 1347. It has to hold this level to keep the uptrend going. Now, the last couple times that it got below that level, it did drop below and then consolidated kind of sideways. And then back here in 2016, it broke below and it hit all the way down to that 50-week moving average. Is that where we're headed right now? Is this going to completely collapse with the record earnings in the first quarter? In 10 days from now, when the earnings start, is this going to be enough to get the ball rolling and the technology stocks moving again, or are they going to sell off earnings and this is going to drop down to that 50-week moving average at 1136, similar to the 2016 move? Well, it's all riding on this middle Bollinger Band right now. Above 1350 for Amazon signals a potential bounce. That's the bounce zone. This is the reload zone if support holds. Now, if support breaks, it's going to be a risk to trade long. It has to. This is the bounce level. After 4 red candles in a row, it should find support. But as you can see here in the past, it's formed 5 red candles in a row and then bounced. 5 red candles in a row and bounced. Is that what we're looking at here? Getting, having this week close below that middle Bollinger Band and then having to work, having it turn into resistance and have to work its way back up. That's where it could be headed. We'll have to see what happens. It looks like everybody is going on vacation, and a lot of people are heading to cash. And so we'll see if that's the capitulation that the market needs to get a bounce. As you can see down here on the 15-minute chart for Amazon, it is below that middle Bollinger Band. It's currently at 1373, and so that level needs to break. If it fails to get above 1373, then this 1357 level will be on deck. That's the low from today. If it drops below that level, then that just signals that it's heading down to the lower targets. Okay, so that would be putting basically it's got to bounce off this 1350 zone, and then you're going to get a bearish weekly chart, and you're going to hear a lot of talk about Amazon being bearish and these FANG stocks bearish on the weekly chart. That's when you're going to get the long-term investors nervous and people starting to really head to the sidelines if they haven't already. And so if it does get above this middle Bollinger Band, the next key level of the break is going to be the 50 simple moving average at 1400. Okay, let's look at Apple. So Apple, it did follow through with a down day today. It had that candle on Friday that was ominous. It's still below 20 on Fasto. It's pinned like it was last time in March or January and February. And so that doji with the long upper wick here, long-legged doji would, you could, this was a red flag. It had hit the 100-day simple moving average up here around 71, 72 up here, 72 on Thursday, and it failed to break that level, and it pulled all the way back and closed right at the open and below EMA 4, currently at 167.58. It has to get above that level to head higher. Now today it had a good bounce off of low of day, and it did fare better than most of the FANG stocks. It closed down fractionally, and so that was in some sort of a way a victory for Apple. It did not crash completely. As you can see, Amazon was down over 5% today. So keep an eye on 167.50. If you can get above that level, then EMA 8 at 169 will be the next level to break. Now, if 167.50 remains resistance, the big level to break below is going to be this 200-day simple moving average at 162.60. Notice that was the big level that it bounced off of, that zone on the previous drop in February. So far, Apple has held up better than that previous drop, and so our buyer's going to hold up here. If it drops below 165, keep an eye on 162. If you look at the Apple weekly chart, it's already below the middle Bollinger Band. Okay, so it's already at risk of starting a new downtrend. It needs to get back above 171.32. It's headed towards that 50-week moving average at 160.73. You can see that's the level it bounced off of in February. It finally found support on that 50-week moving average and bounced and had that multi-week run, the epic run back up to the highs. And so, it's making a higher high right now, which is positive, but it needs to continue that trend. If it were to drop below that 165 level, you could see that 50-week moving average retested. If you look at the 15-minute chart for Apple, you can see it heated up into the close. It did close back above that middle Bollinger Band, so it needs to stay above 165.78. If it can hold that level, get above 167 zone here, then you're looking at the 50 simple moving average at 168 as the next big level to break. They've got, Apple has them stacked up here with the 50, 100, and 200 simple moving averages. That 200 currently is a big level. It stalled out at that level on Thursday. Once it gets above that, then you're looking at the 300. But first things first, it has to hold the middle Bollinger Band, break 167, and then see if it can hit that 168 level. Okay, let's look at Netflix. Netflix is got crushed today. Okay, crushed 5%. So I'm not sure how the tariffs are going to affect Netflix, but it's getting punished nonetheless. And so is this a buying opportunity for Netflix, or is there more pain and suffering coming? Well, right now you have Fasto at 10.3, so it's extreme oversold levels. It tends to have a technical bounce when it's down at this level, at least a one-day bounce. And so the big bearish development today was that break below the 50-day simple moving average at 286. That is not the move that the bulls wanted to see. It also broke back below the resistance level from January and February, where it broke out from. So now it's back below the key resistance level. You don't want to see this 50-day simple moving average at 286.64 turn into resistance. So trading below 286 signals downside risk. If it can get back above 286, then it's EMA 4 at 290.70 is the big level to break. Once it closes back above that pink line, that'll be a signal, okay, it's trying to bounce. Now, if it struggles with 286 and it turns into resistance, it could really get working to the downside. You have the 100-day simple moving average way down at 241. You have the February low down here, the low close at 250. So yeah, you could be, it could drop another, $30 to $40 before, it needs to hold this 50-day simple moving average for the bulls. It will be very bad if it doesn't. You're going to find support on the way down on these candles, but it's just going to signal continuation. It's in a downtrend right now. The candles are forming below the middle Bollinger Band, and they're riding EMA's 4 and 8 resistance lower. And so it's bad enough when it gets below the middle Bollinger Band, which is the 20-day simple moving average. But when it gets below the 50 as well, that's when it's confirming this is a very strong downtrend. So Netflix needs to get above that level this week. Watch it closely. If you look at the Netflix weekly chart, it's still super bullish in the weekly chart. It has 4 red candles in a row, but it's holding EMA 13. And so this is showing the risk that you can see on the daily chart. If this 50-day simple moving average breaks, you could see a drop down here to this 250, 240 level. And then notice how on the weekly chart it's showing the same thing. If EMA 13 at 276.66 fails to hold, then you're looking at a drop down to the middle Bollinger Band at 248.91. That puts that 250 level on deck. So you're getting confirmation on the daily chart and the weekly chart that these are the two big levels. That you know, there's big downside risk if support breaks here. You know, as you can see back here, when it gets, you know, it retraces back to the middle Bollinger Band. You know, it retraced back to the middle Bollinger Band. Now right here, it hit the EMA 13 and bounced. That's what bulls are looking for. 1, 2, 3. This had 5 red candles. You know, like yeah, it's going to be interesting to see if this is going to be a red week, you know, and set up for a bounce, because it's just going to be interesting to see how this plays out, because there's still, you know, you've got, you know, 2 weeks until the earnings start coming in, and who knows if that's even going to save the day. Okay, so let's look at Google here. So Google is down 2.36% today. I mean, people love Google. From what I hear, they're sitting on $100 billion in cash. All right, in cash, and it's getting punished by tweets about Amazon ripping off the post office. I mean, come on. This is just getting way over the top. Now, is this way overvalued? That's up to you to decide. But technically speaking, it's oversold at 14.76 on Fasto. Okay, you've got RSI up here at 37. You know, it's not below 30, but you know, it's down here near that 30 level. The bottom line is it had the bears close below the 200-day simple moving average today. That's not what the bulls wanted to see. It's back below 1025. It has to get above that level and above EMA 4 at 1022. If both of those levels turn into resistance, you're gonna see the 300-day simple moving average at 979 tested. You know, we've been talking a lot about the 977 level. Well, the 300-day simple moving average has been slowly rising, and now that's up to 979. But the bottom line is, if the 200-day simple moving average turns into resistance, you're looking at Google below 1,000, and if that happens, look for a bounce off that 970 to 980 support zone. It should be able to hold the 300-day simple moving average. They have $100 billion in cash, and there's good earnings that are coming up. So yeah, this is crazy, but you have to follow the charts, because you know, we can you know, think all we want, but the charts are telling us you know, how you should trade. You should follow the technicals, because they're signaling whether there's more downside risk or whether there's upside potential. And right now, with Google breaking the 50-week moving average interweek, that's a major red flag. Okay, so it has to stay above 1017 for the week. If you see a weekly close below this green line, that's going to signal major downside risk. It's lined up with the lower Bollinger Band here at 989, and so you can see that's putting that 980 zone on deck. Now, if it were to drop below and it turned into resistance, then you're looking at Google down here at the 100-week moving average at 906. Is it going to bounce off of the 50-week moving average like it did in 2016 in November and December when it hit that level and held, or is it going to pull a move like it did in June of 2016 when it broke below the 50-week moving average? It took a couple of weeks for it to get back above. You know, this was this is a weekly chart, so you're looking at a whole month before, you know, you're just looking at a lot more consolidation here if this 50-week moving average turns into resistance. So it's going to be a major level to close above for the week. So keep an eye on 1017. Okay, let's look at the Google 15-minute chart. It did heat up again into the close. It's back above the middle Bollinger Band, so keep an eye on it tomorrow to stay above 1,005. So if it's above 1,005, it signals that it's holding, and then you want to see a break above 1022. That's where the 50 and 100 simple moving averages are converging on this 15-minute chart. If it can break above those, then we have the 200 simple moving average back on deck up here at 1039. All right, so this is a big day tomorrow for Google, because if it fails to hold this 1,005 level, you're looking at it dropping off this chart into the 970s possibly. Okay, so this is going to be you know, it's trying to get this bounce off of this key support level. You can see it's trying to hold support from over here on the 28th, and so it's going to be really crucial that it holds this zone, or else it's going to drop to the next level. Okay, let's look at Microsoft. So Microsoft did close down 3% today. It got punished. It's brutal. It was a brutal day for Microsoft. It's back below 20 on Fasto. You know, like every time that it gets below 20 on Fasto, it's been a buy opportunity, at least for a not necessarily a buy as far as a long-term investment, but as far as a technical trade where you get a technical bounce. And you can see here there's a below 20, and you got the on this red candle, and then there's a white candle. You know, below 20 on this red candle, white candle. Below 20 on this red candle, white candle. You know, same thing over here with these candles. And so the same thing happened over here, except for it did have 2 red candles in a row here, and then it finally bounced with a huge bounce. And so the point being is that when Microsoft gets below 20, you're usually setting yourself up for a technical bounce. We'll see if that happens again. You know, there could be a bearish change in trend. This 100-day simple moving average did hold into the close, 88.38. It needs to hold that level. If it breaks below, then you're looking at this low close here at 87 on deck, and then a possible drop down to 84.50. That was the low close in February. Everybody that's talking about retesting those lows, that's what those guys want to see. They want to see that capitulation. You know, they're looking for the giant volume spike. I hear all these people saying, well, there's not enough volume behind this move, and it's so much less volume. Well, I don't know. Are they looking at the same charts as me? Because look at the volume over here for Microsoft. It looks pretty similar to the volume over here from the February drop. I mean, it's pretty darn similar. I mean, yeah, there was a couple days that were bigger, but I mean, look at that. I mean, besides, there was 2 big days here, and all these days are actually, you know, more solid volume than you know what I mean. You've got, to me, this is very comparable to the amount of volume on this drop and the amount of volume on this drop. So those volume people that are talking about volume and saying that that needs to happen, I mean, look, there's big volume down here. I know that there was maybe more of a capitulation spike on this big volume spike, but this is big volume down here. This is solid volume. You know, is it the same thing with Apple? You know, Apple doesn't have as big a volume, okay? So yeah, so they didn't get that quite that big volume spike as February. Okay, so those guys are right on that one. But look at Amazon. Amazon has huge volume down here. So those volume freaks that are saying we don't have volume, look at this is looking like, you know, it looks like some people capitulated down here on this big. This is just like this candle, but they did push it lower. But look at all the volume down here. That, you know, that looks like people are really, you know, dumping. And then you've got down here, I mean, hardly any volume for Facebook on that February drop. Look at the volume now. You know, huge volume down here. So there has been big volume on this drop. So people that are saying that there's not volume on this pullback are not looking at the same charts that I'm looking at. I'm not saying they're BS. I'm just saying that, you know, maybe I disagree with that analysis. And so here with Microsoft on the weekly chart, you can look at the volume for last week for Microsoft. I mean, that was a huge volume spike. Check it out. I mean, people were loading, you know, over 200 million shares. Check out the white candle. It was holding that middle Bollinger Band. There was a lot of indecision with the long upper and lower wicks forming what we call a spinning top here, because the lower wick and longer wick are more than twice as long as the real candle body in the middle. But there was big volume last week, and so, you know, are people going to get burned here that were loading calls, or is it going to hold the middle Bollinger Band and bounce? It's all coming down to 89.18. So above 89 signals that might, you know, if it can close above 89 for the week, that would be bullish. If 89 turns into resistance, that's going to signal downside risk. You know, the bulls do not want to see Microsoft failing to hold this middle Bollinger Band. This middle Bollinger Band is held all the way since, let's see, the last close was back here in June of 2016. And so just 2 weeks ago, there was a close below the middle Bollinger Band, and then now it's back below. You have to go all the way back to 2016 to see this type of level for Microsoft. And so on the weekly chart. So with earnings coming up and with everything happening with Microsoft, and I mean, they just came out last week and said they're going to be $1 trillion company, the first $1 trillion company. That's what analysts were saying. Is it going down to the 50-week moving average and going to test 79? Just like, because that's where it's headed. If the middle Bollinger Band turns into resistance on these weekly charts, then they're heading to the 50-week moving average. That's what they do. Look, that's what they did back here. And so that's the downside risk. So the bulls have to step up. Major downside risk if 89 is resistance for Microsoft this week. So keep an eye on that level. As you can see, it got back above the middle Bollinger Band at 88.37 into the close on the 15-minute chart. All right, that was a nasty pullback. You know, hitting that 300 simple moving average was the signal to lock in gains on Friday. It did pull back quickly. it was, you know, it's always a tough call. It looked like they were trying to move forward, but you have to break that 300 simple moving average and stay above in order to head higher. When it fails to break, that is a signal to at least take some off the table. And then today they gapped it down below the middle Bollinger Band, signaling more downside risk. And they basically wiped out all the gains from last week, you know, from that Thursday in a heartbeat. And then they took it lower. And so basically, it's right back where it was on the dip. You could see on Thursday, it dipped at the open. And so it closed right at that level. So it did a full move, you know, where it ran all the way to the top, came all the way down below, and then now it's back where it started on the dip before the last big run. So now is it going to try to make another push, or is this level going to turn into resistance and then it's gonna drop further? So keep an eye on 88.50. Above 88.50 signals that it could head higher, and then you want to see 89.63 break. When it got above the 50 simple moving average on Thursday, that was the signal. Okay, yeah, it's really happening, and it ran all the way up into the 92 level. If it fails to break 89.63 when tested, if it does test that level, then that signals downside risk, you know, or to lock in gains, temporary top, that type of thing. Okay, let's look at Intel here. One of the biggest beaten down stocks. I think it was I think it might have been the worst performer today. One of the worst performers. It down 6% today. It got crushed. They were saying that they took Apple isn't going to use their chips. Something like that is the news. You have to check the news, but it dropped on some kind of news like that, and it's breaking below the middle Bollinger Band. It had got back above. It had that really nice move on Thursday. It closed at high of day, and then they just drove it hard. Today it had a big bounce off of 47.50, and this 50-day simple moving average at 48.26 supports them. It needs to hold that level. If you see it drop below 48, if it gets below that 50-day simple moving average, then you're looking at the 100-day simple moving average at 46.60 or 45 on deck. That is the downside risk, that it drops to 46.50. If it holds 48, then you're looking for a move back above EMA's 4 and 8 and this 50 to 50-50 resistance zone. The bottom line is, if the middle Bollinger Band, currently at 51, right up here, turns into resistance, that's going to signal the possible start of a new downtrend for Intel. Okay, is Intel ready to start a new downtrend? Let's look at the monthly chart here. This is the one that I was showing you, you know, where it did hit the 70s. So this chart's interesting because in 2000 here, it's showing the high up here at like 50 something, 52. But it actually, if you look back in the 2000s, it did hit up in the 70s. So this is not the all-time high last week. So I need to correct that. The bottom line is that it's hitting this key resistance level from 2000. Okay, and if it fails, if it stalls out here and it fails to break above this 50 resistance zone, that could signal a temporary top. That was the top in 2000. What I would watch is EMA 4 at 48.90. Now this is a monthly chart, so this candle will not set until the closing bell at the end of the month. And so you know that's the end of April, on the last trading day of April. A lot can happen in the next 4 weeks. I mean, we have earnings season starting. You know, a lot of things can change. But if it closes below EMA 4 for the month, that's going to be your signal it's cooling down, and you could see EMA 8 at 46 tested. And you know, the big thing is that it could retrace back to that middle Bollinger Band and test that 40 support level if it really did start pulling back on that monthly chart. So keep an eye on those levels. If you look at the Intel 15-minute chart, you can see it had that sharp bounce. Okay, so people were loading down here off of 47.50. Look at that big volume spike, and then it came back up and it hit that middle Bollinger Band at 49.25, 49.19, and it failed to break. You can see that upper wick, and it pulled back. Now it is holding EMA's 4 and 8. It has to stay above those levels. It needs to stay above 48.78. If it drops below, that's going to signal downside risk. And now if it gets above that 49.25 level, look for a run up to 50, and this 50 simple moving average. It has to get above that, and then the big level is going to be up here at 51. That's the 200 and 300 simple moving averages in the 15-minute chart. It got above those levels on Thursday of last week and failed to hold and pulled back, and so it has to turn those levels into support to get the real reversal going. Okay, thank you very much for viewing this video. Please come check out our chat. I'll post the link below the YouTube video. Thank you.